This is question number 4 on QZ3 for module 3. So this is also another question on the decomposition of ROE, return on equity, into the operating component and the non-operating component. So we're provided with income statement and the balance sheet of this company 3M. And part A is compute net operating profit after tax for this year. Assume that the combined federal and the statutory rate is and round the answer to the nearest whole number. So to get this, we start from copying all the financial statements into Excel. So, and to facilitate the calculation. So copy that, paste the special, paste only the text. So this means we don't care about format. And double check, sometimes we want to get rid of this dashed symbol, because if you add that, the calculation involved this cell, it might give you some error message. And we can also copy the balance sheet. Leave some space for the calculation of income statement related items, such as NOPAT, right? We know that to get NOPAT, we need to first get NOPBT, which is net operating profit before tax. So NOPBT is generally the same as operating income. And let's further look at the items below this operating income. We can see that it doesn't look like there's any other operating related income item. So this is NOPBT. And tax, next one is to get the tax on operating profit, right? Tax on operating profit is further equal to tax expense plus pre-tax net non-operating expense times the statutory tax rate. So tax expense, this equals provision for income taxes, right? And then the pre-tax non-operating expense. So this is basically the items below this operating income. So that includes interest expense and interest income. And one thing we need to pay attention to is that this is a pre-tax non-operating expense. So that means expense should be treated as a positive number. And that's exactly what's shown here. Expense is positive and income is negative. So we just need to add up these two numbers. And if you actually, this work is already been done by the income statement here. So that's the sum of these two, income, interest expense and interest income. So this is pre-tax non-operating expense. So now we can calculate NOPAT. So NOPAT is basically the NOPBT minus tax, right? Tax on operating profit. And tax on operating profit is further equal to tax expense, and then plus this pre-tax non-operating expense, and then times this the statutory tax rate, which is assumed to be 35.9%. So, and here actually I already kept 0 decimal place, which is rounded to the nearest whole number. If not, then you need to change the format to round 0 decimal place. And also make sure that if you read all other rounding requirements as well, especially if it says use the rounded number for the subsequent calculations, or round your answers to 2 decimal place, and do not round until your final answer. So this is important. It tells us that we don't have to use the round function in Excel to keep the desired decimal places for the subsequent calculations. Here, we just need to change the format. I think I explained the difference between changing the format and use the round function in Excel in an earlier video. You can check on that. So now just copy the number back for the first part, NOPAT. Actually, I need to do this. Looks like I need to manually do this. So part B, compute net operating assets for these 2 years. Treat non-current investments as a non-operating item. So this part is probably more involved than the calculation of NOPAT because this relates to the balance sheet. First job, we need to we need to mark all the assets and liabilities of the balance sheet into the operating items and the non-operating items. So we start from the asset side. Cash and cash equivalents is non-operating. Marketable securities, and this is also non-operating. Accounts receivable, this is operating. We mark that in red. And inventory, operating. And finished goods, work in progress. This is basically these are components of the inventory, right? So and then we can just leave the red mark to the total inventory just to save some time for the calculation later. And other current assets is also generally treated as a operating item. So marketable securities, non-current, you can see the hint here. It says non-current investments are the non-operating item. This is also generally done. And investments, this is not operating either. And property, plant, and equipment, this is operating. And net accumulated depreciation, and then the net PPE, operating. So probably it's not a good idea to add this because basically the sum of these two. I think to facilitate the calculation, I can just leave this in black and just add this in red because this will just give me one number, which is the difference between these two. And goodwill is operating in general. Intangible assets, this is operating too. Prepaid pension benefits, and this relates to employees. So this is also operating related. Other assets are also generally treated as operating. So we're done with the asset side, and let's move to the liability side. And we start from short-term borrowings and the current portion of long-term debt. And this is financing related, so it's not operating related. Accounts payable, this is operating related. Accrued payroll, operating. Accrued income taxes, operating. And other current liabilities, operating as well. And long-term debt, this is not. This is financing related. And pension and post-retirement benefits, this relates to employees as well. So this is also operating. But in this case, there's no such item. So we just eliminate this dashed symbol. And other liabilities, generally, we also treat this as operating. So now we are also done with the liability side. And now let's calculate the operating asset and operating liabilities, and then their difference is basically the net operating asset. So operating asset, we just need to add all the items on the asset side, which are marked in red, which starts from this accounts receivable, and then total inventories, and then other current assets, and then net PPE, and then goodwill, and then the intangible assets, and prepaid benefits, and current other assets. And then we can pull the cell to the other year, automatically do the calculation. Now operating liabilities. So this is basically summing up all the items in red, which are the liabilities. So start from the accounts payable, and then accrued payroll, accrued income taxes, and other current liabilities, and then other liabilities. And there's no pension, so I didn't add that. And this is operating liabilities, and similarly, just move the cell, move the calculation to the other year. And now we take the difference between the operating assets and operating liabilities, and then we get the net operating assets. So we just minus this, and that gives us the other year as well. So then I can just copy the number back, copy the number to the right place, and C, compute RNOA and NOPM and NOAT. Round your answers to 2 decimal places. But RNOA and NOPM are in percentage terms, and NOAT is not. So do not round until your final answer. Do not use this to calculate RNOA. So we know that RNOA is defined to be NOPAT. It's right here, and divided by the average level of the NOA, average level of the NOA. So I just used the average function in Excel, equals average and open parentheses, and you can just take the average of all the cells that you choose. So that's how you use the average function in Excel. And then the format here, I need to put this in percentage and keep 2 decimal places. And then move this. I guess I don't have to move that. So this is 34.25, 34.25. And NOPM, this is a net operating profit margin. So this is basically defined to be NOPAT, right? And then divided by sales. So here, divided by net sales, it's right here. So for this one, we also need to put this in percentage term and keep 2 decimal places. So this gives us 17.17%. And NOAT, so this is a net operating asset turnover. So this is defined to be sales, right? Net sales, and divided by the average level of the net operating asset. So this is these 2 numbers, average level. And here I don't have to use the percentage format. I can just use the number, but still keep this to 2 decimal places. So this gives me 1.99. And D, compute net non-operating obligations, N&O, for these 2 years. And N&O, this is defined to be the non-operating liabilities minus non-operating assets. So non-operating liabilities are basically the sum of all the items on the liability side of the balance sheet which are not marked in red. So that means we start from these short-term borrowings, and then we also have this long-term debt. So basically these 2 items are all the non-operating liabilities. And then we subtract the sum of all the non-operating assets. So non-operating assets basically are all the items which are not marked in red on the balance sheet. So we start from the cash, and then subtract marketable securities, and then we should, I guess, subtract this marketable securities non-current, and subtract this investments. I guess that's all. Yeah. So this is basically my N&O. So then copy the number back. And compute return on equity. Round your answers to 2 decimal places. Do not round until your final answer. So ROE is defined to be net income, right? The net income divided by shareholders' equity, average level of the shareholders' equity. So net income here, we further has 2 numbers. One is net income including non-controlling interest, And the other one is just net income. So this second number here refers to net income from the parent company's perspective. And if you check the definition of this ROE, here we should use the net income from the parent company's perspective. So we should use this number and then divide it by the average level of the shareholders' equity. For shareholders' equity, we also have two items. One is the shareholders' equity from the parent company's perspective, which is total 3M company shareholders' equity. The other one is the total equity, including the non-controlling interest. In this case, actually, it doesn't matter, but in general, we should differentiate between these two numbers. And since our numerator uses the income from the parent company's perspective, so our denominator should also use the same. So that means we should use the total 3M company shareholders equity, this item here. So this is my ROE. And format this, keep this in percentage term and keep two decimal places. And so we can just copy the number 37.74. 37.74. So what is the non-operating return component of ROE for 27? Round your answers to two decimal places. So the non-operating return is basically the difference between ROE minus RNOA, right? Because RNOA is basically the operating part of ROE. So that's why if we take the difference, that becomes the non-operating return. So 49. So this is positive, yeah, and this positive means that because this relates to borrowed money, yeah, because of operating return, this return on net operating asset does not include any financing related items, right? So all those financing related items, the return generated from those items are included in this non-operating return. So when this is positive, so that means the cost in borrowing will not be greater than the return generated from that borrowing. So we just look for the answers which matches that analysis. ROE equals RNOA implies that 3M has taken on too much financial leverage, and this is not correct. It implies that 3M is able to borrow money to fund operating assets that yield a return greater than its cost of debt. And this is basically what we are looking for. I guess now we can check our answer. And you can see that you have correctly selected 11. So that means all the answers has been correctly answered.